Well, the country's unemployment rate continues to rise, and coupled with a stagnant economy, South Africans should not expect a change in this situation. Economist Dr. Nthabiseng Moleko believes government hasn't done enough to ensure economic growth. Just last year, a World Bank report suggested that implementing policies that preserve macroeconomic stability could revitalize the job market. Dr. Moleko joins me now to talk about this. Doc, thank you for your time, and always a pleasure talking to you. Your focus is on government's intervention. You're saying it hasn't been enough.
Very good morning, and thank you so much for having me. What I'm saying, Tumelo, is that there is hope for the economy. We really need to put in place the adequate measures to respond adequately to the kind of structural problems that we have. I think that a lot of the macroeconomic issues in the economy are really primarily the problem that we have, and we haven't adequately addressed that. The second point is that the economic strategy in this country doesn't talk to the outcomes that we need. For an example, when we talk to the existing strategies, we're talking about 1 million jobs in 10 years when you talk about unemployment, which you started out with. And what we really need to see in the country is at least 5 to 6 million jobs created in the next 5 to 10 years. And the kind of strategy that we have in place doesn't have a labor absorptive strategy, nor does it have an effort to deal with the structural constraints of the labor market failures that have inherently been carried through since 1994. So these are the kind of problems we need to address, and we haven't yet succeeded in doing that.
Yeah, you're saying, Doc, that there is hope, but is there will from the government?
I do believe, what I can say is that I do believe that there is a will, in that when you look at the efforts to restructure, we talk a lot of economic restructuring. We're trying to quell what I'd call the low growth trap. And I think that there are some policy positions on the table, but I think that the focus is really on the growth path that we need. So we've got to look at what is the adequate growth path that we want to have. I would say that, one, we've got to have an industrial-led growth path. If we start to look at industrialization as a key competence, increasing agricultural productivity, increasing our domestic productivity, and enhancing economic outcomes from a primary and secondary sector value add, you'll begin to see the structure of the economy changing. You'll begin to see more people employed. You'll begin to see more people actually in the provinces where you're not seeing economic activity happening employed, and not migrating north or west, but rather staying where they're supposed to, in terms of not where they're supposed to, but rather, let me say, where they are based, and they don't have to be economic migrants because of lack of opportunity. What that requires then is that we've got to be more decisive, and I think this is where both the public sector and the private sector have to really come on board. We've got a strategy for infrastructure-led investment. The president announced around infrastructure investments. But what we need is the private sector really come on board in terms of participating in the infrastructure drive. So the infrastructure fund, together with Infrastructure South Africa, has 100 billion per annum that we need to raise, with the capital markets raising the balance of that. In the next few years, we've got 10 billion from the public sector, at least to the minimum, and 100 billion that needs to be raised in the private capital markets. You've got to have private sector really come on board. And that is really quite easy, I'd say, because I believe that the infrastructure projects are there. The packaging has been done. The BFI process from National Treasury is underway, and there's significant projects that have actually had the sufficient due diligence to prove that they have merit on the table. And I think we've got to make sure that the gross fixed capital formation as a proportion of GDP drives up both our public and our private sector investment. We'll then begin to see some change in these regional issues. I think the second point is, let's look at the nodes where growth hasn't happened. We've got Northern Cape, Limpopo, Mpumalanga, Eastern Cape, just as examples. We cannot concentrate that investment in Gauteng and Western Cape, unfortunately. We do have to have economic drivers in these other areas where we have not seen them. And I think that for us to begin to grow, the underdevelopment, the poverty is concentrated there. And the unemployment numbers coming out tell us Eastern Cape is faring the worst. There's no economic activity. And that means that investment-led drives have to go into those provinces where you haven't seen restructuring take place, and new money to deal with the backlog of poverty and the backlog of infrastructure.
You speak of private sector, and early on, Doc, I asked you about whether or not there is will from government, but also is there will from private sector? I mean, recently we're talking about some of the challenges that business is facing, just in terms of opening up more jobs for people, opening up the job market. But not only that, direct foreign investment also in the country. country, issues around load shedding, just to name a few, blackouts, the political instability in this country. Are we attractive as a country for these investments?
South Africa has significant infrastructure. A lot of the time people look at the downside risk. Yes, we do, upside risk. Yes, we do have problems with energy. The whole world is dealing with the issue of increased inflation and rising costs. The whole world is dealing with the geopolitical issue of Russia and Ukraine and the constraints on supply and how that has effect on the price of inputs, particularly agricultural inputs and, of course, fuel and petrol. All of us are bearing the brunt. It's not just South Africa. However, I do believe that private sector is a critical enabler and player in terms of reviving economic stimulus. And I think that the private sector, particularly pension markets, and let me talk about private sector credit extension. That talks about the allocation of capital in the financial markets. The South African economy is highly financialized. We haven't seen sufficiently the private sector being disciplined according to what they, I believe at least, should be putting in place for SMMEs. The money that is given to investment for driving both industrialization and I think small enterprise development has been really, I'd say, minuscule. You can see that in the allocations and in the targets of the BBBE codes. And you see that the financial sector codes, we're far from where we should be in terms of meeting the targets. So what should be done? What should be done is that we need to aggressively make use of our financial and capital markets to both industrialize and to ensure increased manufacturing activity and ensure that localization happens, but you have to put money into SMMEs. It cannot only be DFIs, the National Empowerment Fund, the Development Bank of Southern Africa, and the IDC, who have the role of stimulating and putting capital into SMMEs and into some of the subsectors which will boost economic outcomes. And I think the 5 banks which have 85% of the market share, they're primarily oligopolies, and they control what happens. We need to have more competition in that sector, but more importantly, they have to invest into productive sectors of the economy. And if that requires government to enable and enforce that, I think that's the direction we will need to go. Because
I appreciate your input. I appreciate your input into this conversation, quite details and an optimistic view as well that you have there, Dr. Nthabiseng Moleko, that it can be done. There is hope, there needs to be more will, but it can be done.